The Eurozone crisis is still a key play for all markets. The next question is where South Africa lies in relation to what is happening elsewhere, as well as what the various risks are, including political policy, macroeconomic, trade and credit ratings, risks, etc., etc., etc. For more, Arno Lorenz, Chief Investment Officer at Atlantic Asset Manager, joins us from our Cape Town studios. Are we safe here in South Africa despite the negative news flow that we've seen of late? And obviously I'm referring here to Marikana and to Lonmin.
Good evening, Bronwyn. I don't think they can always say that we're safe. Sometimes if you find yourself in a dark alley, you never know what's around the corner. So it's going to be one of those issues that there's so many unknowns and uncertainties that always lie ahead for investment markets in particular. You can always get something out of left field like we had with the Lonmin issue. I think it's just a reminder for us that we still have a long way to go from a political perspective as far as democracy goes, the maturity of our political institutions, etc., etc. But this is a journey, and I think we need to look at it, that particular incident, I think, in that context. Within the context also of the journey that the Eurozone is going through, which is also for many countries, and we know we've been through this for a couple of years now, Spain, Italy, Greece, etc., is a journey for them as well, although there is some light at the end of the horizon, I think, for some of these countries.
Arno, when you look at the South Africa in relation to the rest of the world, now last week I did a presentation to a whole bunch of fellow accountants. It was really a barrel full of laughs, but I was asked the question, South Africa's debt situation is actually quite acceptable. Our economy is at least growing, it's not in recession. Our interest rates are at 30-year lows. Why is our credit rating so low in comparison to other countries? I mean, some of the countries we all know about, Portugal, Spain, they've got the same credit rating as South Africa, and yet everyone is just so concerned about them. Why is ours so low? Is it just politics, or is there another structural reason?
Wayne, I do think that it is somewhat of an anomaly in a sense, because again, I think it's because of where we came from. So yes, we are on this path and we are on this journey, and we sort of have a good idea and sense of where we're going to and where we are. But I think the credit rating agencies are, in a sense, being somewhat conservative in the sense that they're not applying the same judgment that they are applying to some of these countries as far as the debt dynamics is concerned. The chief one amongst them must be, I think, policy uncertainty. However, it must be said is that how many years do you have to keep getting, let's maybe not say A's on your report, or B's, perhaps a C plus or a B minus in a sense, before you get some sense of credibility for the policies that you're doing. There's been so many fears about nationalization for years and years, for the last 20 years, and we haven't fell into the trap of going down this route. So I agree that if one looks at the rating agencies and ratings per se, is we definitely have a case to make that our debt dynamics are by no means in the same position as some of these countries. And we have had policy consistency, albeit I would say some policy choices have not been the best, but policy consistency for a long period of time, to the extent that I think gradually but slowly we are getting to the stage where we are becoming a bit of a beacon for foreign capital, and we're seeing this.
What's happening to South African interest rates at the moment? Obviously, we had the surprise cut from the South African Reserve Bank. It took most economists completely by surprise, although the FRA market had pegged it right. What is the FRA market saying at the moment? Are we in for another cut before the end of the year?
There's a slight possibility of that, and I think correctly so, the market's pricing a slight possibility of that, in the sense of that you can't rule it out completely. And again, I don't even think the Reserve Bank itself knows at this point in time whether they are going to cut rates before the end of the year. It is very much, in my mind, a data-dependent decision, in the sense of very much what the governor said at the last meeting, which is that it's somewhat preemptive. So they recognize that there is a lag from what's going on in Europe. So they can see that there is going to be some impact on the South African economy. But going forward, is it going to get worse from this point onwards? very much dependent on what happens between now and, let's call it, the end of the year in Europe, and then on to South Africa. So I think it's a bit of one of those toss a coin and you'll have a good bet on that one.
On 3 questions from my side. Firstly, why the US long bond has come up from the 1.4, 1.5% to the 1.8, 1.9%. Why are people buying the story? I mean, who in their right mind would buy German bonds or American bonds at these incredibly low interest rates? So is there something that I'm missing, or is there something that other investors are missing? You think it's a very, very expensive asset? Secondly, the rand. I mean, in theory, the rand should actually be a little bit stronger than what it is now. I mean, we know about the Moroccan, we know about the violence, and the rand did weaken, but by and large, that's already out of the system. Why isn't the rand a little bit stronger than where we were? And then the last question, which is obviously related to the rand, what about our long bond yields? I see there's been quite a nice rally here today, but it's still not giving you a really high yield in relation to our past, or are people just benchmarking it against overseas bonds?
Okay, let's start with the US Treasury side of things. I think what's happened there has been, if one looks at the low point that we reached on US Treasuries, was really a function of looking at the world through a very bearish sort of rose-colored spectacle, not rose-colored, the opposite of rose-colored spectacles, in the sense of that it was everything's going to go wrong, the economies are looking really weak. All the data was sort of heading on the downside. And of course, investors were saying, well, it's a flight to safety. Let's rather get out of the equity markets, go into the bond space. And you saw the rally on those treasuries. Of course, I think, as is usual and typical in terms of investor behavior, it always swings too far to the one side, in the sense of people became too pessimistic and too much money went into the bond space. So I think what we've seen at the moment is a retraction from the ultra bearish stance as far as where the economy was going, in the sense of that the markets now got to the stage of realizing perhaps the economy is not going to collapse again. So there's been somewhat of a retracement, shifting back perhaps into the equity space to a certain degree. That's the one, US Treasury market. The rand space, I agree, you can make the argument for, if you stripped out the Lonmin disaster side of things, that perhaps the rand would be a bit stronger. I think that at this stage we are still in this very broad range where, because of where our interest rates are, or bond yields rather, we are going to continue to attract foreign capital. As I said earlier, somewhat of a beacon as far as our debt dynamics are concerned, much the same as Australia, and we are going to continue to attract those flows from time to time. It's never one-way story. It's going to swing from one side to the other side. So I think very tough to say, should the rand be 10, 20 cents stronger, very easily it can move within a couple of days to that. So perhaps tomorrow we see that, I don't know.
Here's a little bit of a curveball for you. You've clearly got your finger on the South African pulse. What would make you leave this country?
Physically or with capital?
Leave physically. Oh no, out of South Africa.
I'd have to be chased out by my clients, I think. That would probably be the only reason why.
So you're very optimistic on the South African scenario going forward. That's where I was going with the question.
Yeah, look, I won't say I'm optimistic. I mean, in the sense of that you have this blanket approval of everything that's going on in the country, by no means. I think there are some serious issues that we have to deal with in the country. It's going to take brave leadership. I don't necessarily approve of some of the leadership we've seen in terms of the skills and what's been brought to the party. We've become obsessed about certain things. And I think we all need to, in a sense, sit down together and decide what our vision is. This is the National Planning Commission's job and what they've been trying to do, and people not listening by the very people that have instituted them in the first place, I might say. And I think they are on the right track, and we need to sit down and listen and talk about what comes out of that plan. But I am optimistic that in the long run we'll get there.
Well, it's not as though you've got many brilliant choices in the international arena to go to in the current environment. Anyway, Arno, thanks very much for your time. Arno Lourens, CIO at Atlantic Asset Management.